What if I told you that the US dollar's reign as the world's reserve currency might be coming to an end? Pause. Saudi Arabia just made a bold move, and the implications could shake the global economy to its core. In this video, we'll break down what exactly happened, why it matters, and most importantly, how it could affect your financial future. Background on the petrodollar agreement. The story begins in 1974, when Saudi Arabia and the United States entered a historic agreement, the petrodollar. For decades, Saudi Arabia agreed to trade oil exclusively in US dollars, ensuring the dollar's dominance as the world's reserve currency. In return, the US provided military protection and economic support to the kingdom. The end of an era, June 9, 2024. But on June 9, 2024, that long-standing agreement came to an end. Saudi Arabia chose not to renew the contract, signaling a dramatic shift in global economics. The kingdom is now open to conducting oil trade in other currencies, such as the Chinese yuan, euro, or even gold. This decision isn't just a one-off event, it's part of a growing trend where countries are moving away from the US dollar. Why did Saudi Arabia make this move? So why now? Pause. There are several factors at play. One major reason is the diversification of the Saudi economy. The kingdom's Vision 2030 initiative aims to reduce dependence on oil revenue and expand into other sectors like technology and tourism. To achieve this, Saudi Arabia seeks to form stronger alliances with emerging economic powers like China and Russia. These nations have been pushing for de-dollarization to reduce their exposure to US monetary policy and sanctions. How does this impact you? The tone becomes more engaging. So, what does all this mean for you, the average American? Pause. Let's break it down. Inflation concerns. If more countries follow Saudi Arabia's lead and ditch the dollar, demand for the US dollar could decline. This might lead to a weaker dollar and higher import costs, translating into inflation that could affect everyday items like food, gas, and electronics. Impact on investments. A weaker dollar could also affect international investments. While some sectors like exports might benefit from a cheaper dollar, it could pose risks for portfolios heavily invested in foreign stocks, bonds, or commodities. Debt and interest rates. As the dollar's global dominance declines, borrowing costs for the US government could rise. If interest rates increase to make up for the loss in demand for US Treasury bonds, it could mean higher mortgage rates, car loan rates, and credit card interest rates. The broader trend, de-dollarization. What's even more alarming is that Saudi Arabia isn't the only country reconsidering its stance on the US dollar. Nations such as China, Russia, and even some European countries are advocating for alternatives. The recent BRICS summit discussed creating a new reserve currency to compete with the dollar. This shift, known as de-dollarization, could accelerate if more countries begin trading oil and other commodities in non-dollar currencies. The future of America's financial dominance, with a serious tone. Let's be clear. The end of the petrodollar doesn't mean the immediate collapse of the US dollar. However, it does raise questions about America's future as the world's financial leader. Pause. If the dollar loses its status as the global reserve currency, America could face challenges like rising debt levels, increased competition, and a potential loss of economic influence. To sum it up, Saudi Arabia's decision marks the beginning of a potential shift in the global financial landscape. While it's too early to predict the full impact, staying informed and being proactive about your investments and financial planning is crucial. Remember, in times of economic change, knowledge is your most valuable asset. If you found this video helpful, please like, share, and subscribe for more updates on how global financial trends impact your daily life.